Hey guys, hope you're all doing well. Today we're going over my option positions, some winners, some losers. I'm kind of just sitting tight for the most part on my covered calls and wheel strategies. And I'm going to go over at the end my issue with the wheel strategy. What is one of the big cons for the wheel strategy? So stay tuned for that. But right now we're just going to go over the positions. Like I said, I ain't done much, but I'll just quickly go over them. I do have a leap here on TME. That's 10-cent music. They're going to be reporting earnings in a week or so, so I'm not selling any calls. I might actually double down on these leaps because I only have one leap so far that I purchased for $5.76 with a $15 strike price that I purchased on April 15th. Now they're selling for about $4.65. So it's getting close to the point where I want to add one, right? Because I'm down about 19% on the position. It's fairly cheap to average down. I'd like it to be a little cheaper if I were to average down. I'll probably wait till earnings and see what happens there. But that's 10-cent music. Next up is the VTRS leap. These are some really cheap leaps. I'm really down on them again. I'm thinking about averaging down again. I got two leaps here with a $12.50 strike price. These leaps both expire. I don't have the expiration date on here, but they're both 2-year leaps, January 2023 on 10-cent music and VTRS. So I bought two of them at $3.40 each. They're now selling for $2.90. So again, VTRS is again coming up on earnings really soon. So just kind of hanging tight probably. See where it moves on earnings. If it gives me an opportunity to add, I might. But I'll make that decision and update you guys along the way. Now, I did have a win on the leaps finally, right? And it was a very short-term win, but I'll take it. I'll take it all day long, and that was MRK. On April 29th, I bought a leap, a $55 strike, for January 2023. I purchased it for $20. You'll see right here, actually. April 29th at 6:50 a.m. I'm on Pacific time. I purchased one $55 call that expires January 20th, 2023 for $20, paid 78 cents commission. And then May 3rd, which was basically, what is that? That was 1.5 days, roughly 1.5 days. MRK had a pop, went up a couple of bucks, got out of it for $21.05, paid 83 cents commission, total profit 103.39. So that was a great return, 5% profit on the MRK leap for 2 days, roughly 1.5 days, basically. Can't complain about that. Actually, that was 2.5, wasn't it? Because I bought it early in the morning. Next up, TLRY. I was gonna wheel this stock, but I always skip earnings. All these have earnings. TLRY's got earnings coming up, so I'm gonna wait and see what kind of move they made. They made a merger with Afria, which is another Canadian MJ company, and it looks like the market didn't like that news. So it's tanked from it was up 18 something dollars for a minute there, and now it's down to 16.10. I'm just gonna wait till earnings. If it legs down again, I may put on a put and establish a position, but until then I'm just gonna sit tight. We've made $91.90 off selling puts for the last 3 weeks. The star of the show, Rocket. Again, earnings coming up. But I've been in this since February 11th, so going on 3 months. We've got total profits currently of $547.16. That includes the stock price, but we haven't sold out of it yet. We do have a covered call, 23 strike, expiring May 7th, so this Friday. So if Rocket gets to 23 or higher by this Friday, we will be closing this position out with about at 23 bucks. Well, let's just look. What will the return be? 23 bucks. We'll have a basically a 29% return in 3 months. So absolutely no complaints there. If they don't beat earnings, I'm happy where I'm at. Cost basis is really nice at 1702, so we'll just continue selling covered calls on it. Let's see, last up, Palantir. Now, Palantir, I haven't done anything because it's been on a downtrend, so I really haven't thrown a covered call against it. It's got earnings coming up here too. So I was kind of hoping that last week that this would get called away from me, to be honest with you. It didn't happen. So I'm kind of stuck with it. And this is the problem with the wheel. You know, it either works very well or it doesn't, right? Because now we're down to my stock cost basis after all these puts and calls is $22.13. And the stock is trading at $21.64 right now. Yes, I can sell a covered call at about $22.50, $23 strike, but I don't want to play earnings just in case it decides to pop up and moon. I'd rather have the upside. Problem with that is the downside. So Palantir, I can see it easily going well under $20. The problem with it for me is that this is in my Roth account, and I don't want to put more money into my Roth account. My Roth account is kind of done. I don't want to mess with it. I don't need the Roth account. I'm doing it in the Roth account to try and generate and grow this money without adding to it. Okay, so right now I have about $1,800 in there in cash, plus this Palantir position. So if it were to drop, I kind of hope it drops to $18 so I can double up the position. I'll drop my cost basis, and then we'll see. At least I have, 2 contracts I can play with. Maybe I'll just put one on, that type of thing. Give me a little bit more flexibility. But, if it doesn't drop very much, we'll just have to play it by ear and see how it goes. If it does pop up, I'm happy to let this guy go at whatever price it decides to pop at. There's always pros and cons, naysayers, whether a stock. I hate playing earnings. Okay. I just hate playing earnings because it's literally a flip of the coin, right? 50% of the time, you're going to have good earnings and it's going to beat. And 50% of the times they're going to have bad earnings and it's going to go down. You could also have good earnings and the stock can go down. So you can't really know exactly what's going to happen. So that's my problem with the wheel strategy. It doesn't work. It works until it doesn't work, right? And if you don't have money to double down, you can be stuck in a position that you can't either double down on certain circumstances, right? Or you can't sell cover calls on it because your cost basis is now too high. So anyway, those are the positions. That's my issue with the wheel strategy. I don't run it very often, so that's a good thing, in my opinion. If you're going to do it, I think you need to do it not on these kind of stocks. You probably should do it on some blue chip companies to run the wheel on that probably is not as volatile as a Palantir, as a Rocket, as a TLRY, as a, these kind of, as a Workhorse, as a Neo, all that stuff. The wheel is probably not the right strategy that fits in. AT&T, that's probably a great one. Coca-Cola, that's probably a great one to wheel in, right? Of course, those don't pay as much in premium, and that's why people don't do them. So, some good for others, bad for others, all that good stuff. To each their own. Everybody's going to do their own thing. I'm rambling now. I'm going to let you go. Leave me a comment down below. Like, share, subscribe, do all that good stuff. And we'll talk to you later. Thanks. Bye-bye. I am not a financial advisor. The information contained in this video is for entertainment and informational purposes only. It is not intended to be investment advice. Please seek a licensed professional for any investment, tax, or legal advice. Thank you.